insights. And right now, folks, we're going to jump over to Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30 Eastern Time. You can reach Tim at his website, ord-oracle.com. And at TFNN, under the Services tab, he's got a couple great webinars, folks. The 6 secret ratios every trader should know. We talk about some of those ratios on these interviews with Tim. And the secret science of market tops, how to identify market tops. Both those webinars, you buy them. They're available on your members page forever. You watch them as many times as you like. Tim Orr, good afternoon.
Good afternoon. So God,
what do you think about this market, man? I see the SPX chart up there, and we're hitting some highs, and we got a little action. Talk to us, please.
Yeah, all right. This is the bottom window is it's actually a 3-month average of the SPX fixed ratio, so it's a moving average. What I did kind of slowed down that moving average to actually look at a real big picture. So the 1-day average of the SPX fixed ratio is actually showing a bearish divergence, but the reason why I'm using a 3-month average, again, it slows things down. And what it's designed to do is is to help identify bigger tops that can be 10% or more. I'm not really worried about a 2 to 3% pullback, but 10% pullback, that concerns me, and so that's the reason why I slowed everything down on a 3-day average or a 3-month average. But right now, if you can see here, we're kind of just making higher highs. As long as the SP is making higher highs, that suggests we can have a short-term pullback, but it won't be anywhere near 10%. So if you look at all the other divergence, the one back in late 2021, the market I think went down close to 30% that time. This one right here really didn't show up at all. This one back in 2024 started to get a divergence in June, and finally we did get the pullback in early 2025. I think that was, 15% or better. So then one back, and here's a COVID crash back here. That was probably 30 or 40% pullback. But right now, we can have a short-term pullback, but this chart suggests it won't be anything near 10%. That's my take on that. And now let's flip to kind of the short-term where we are. Again, panic's important in the market. You only form panic when you're basically near lows, and that's only where panic forms. And panic can actually happen in an uptrend, and that's exactly what we're having right now. The market's been kind of inching up here, and the bottom window is the 3-day trend. Next window up is a 2-day trend. This is a 5-day trend, and the top window is a 10-day trend. Obviously, the 10-day average of the trend is more important than a 3-day average of the trend because it takes in a longer time frame. And the 10-day trend is not bad. It's 1.2, but it's going up. But over the last several days here, over the last couple of weeks, the markets have been moving up, and the trend closes have been pushing the 1-day or the 2-day and the 3-day trend up into bullish territory. The 5-day is not there, but it might be there today. Because last time I looked, the trend was around 1.3 intraday. The market hasn't closed yet, but this is bullish. So I put it in pink areas where at least the 2 and 3-day trend were bullish. Sometimes all of them were bullish, but at least the 2 or 3-day trend was bullish. And we're kind of in that region right now. So the market's actually been going up, and the 2 and 3-day trend is kind of keeping pace and pushing in bullish territory. So in a nutshell, I don't see a top here. If you look at this is kind of a different way to look at the trend, but I labeled in blue here the trend closes. Yesterday we had a 1.24. The day before that we had a 1.24. A couple of 3 days ago, I think it was 1.45. Anyhow, the last 7 days, 4 of those days, trends were near 1.2 or higher. And so as the market's going up, the trend's going up with it. That's going to continue. Normally, you have to worry when the trend gets up around, the 10-day trend gets it down around 0.9 or below. That shows kind of a euphoria type thing, and that a lot of times comes near highs. And we're not even having that near high here. So S&P so far look very good. I labeled this pink area right here all the trend readings of 1.2 or higher. And they all come in eyeballing it here between, I don't know, 656 to 680. This is a big support area. So if we pull back, it does suggest that pullback might be minor because we got too much panic in the market. So panic's bullish. So how high is high? Don't know. I'm staying long, even though Mark's pulling back today. We got a trend last time I looked, 1.3. So I don't see any top of any consequence. If it does pull back, it's going to go right back up again. So it's bullish.
And I appreciate it. And, I was thinking of you this morning early. Now, we've changed. The VIX at 1645 right now, but we had a VIX with a 14 handle this morning. Now, that's, off the, but that, as in.
On the open, whether? I didn't see that. Was it on the open then?
Yes, right on the open, and then it kind of shot up to 1575, but it was literally right at the 9:30 open. You got a 1498 VIX. I said, man, 1498 VIX. No one's worried about anything. What's getting in the way of this market? And we got a little pullback, but in that same regard, still at 1645 right now on the VIX. Not a lot of, I know you talk about the, one of those ratios in that webinar that you did that's fantastic, of course, is the SPY VIX, and yeah, I mean, we're still at a relatively low VIX. What do you think about that action?
The VIX thing going on right now?
Yeah, just in terms of where we are with the VIX, with the SPY VIX. Let's talk about that then. Do you have that ratio by chance, or what do you think about it?
The daily is showing a little bit of divergence here going on. But the trend, the panic actually rules the VIX, I guess you might say.
Okay.
Between the two, I'd pick the trend readings. Because you're just not going to have a top of any meaningful duration, I guess you might say, until you get that 10-day trend gets down around 0.9 or lower. Then you can get a pullback. We're not anywhere near that. The 10 days coming in 1.12. But I did see the daily SPX VIX ratio where we're hitting new highs, and the dailies are not hitting new highs. But that can go on for 30 days.
Okay.
So I kind of switched to short term. I'm watching the daily. The monthlies look fine, but a 5% pullback could happen maybe in September. I don't think it's going to happen in January. Not September, but February. But I don't think anything's going to happen here in January. January so far it looks pretty good. So I think we're just going to keep pushing higher here.
All right. Are we going to talk some metals when we come back?
We are.
All right, man. So, how about it? Silver hitting $89 today, $89.21. We backed off a bit. We'll talk some gold and silver. We're coming back with Tim, folks. Stay tuned. We'll be right back. If we're back, folks, I was saying we got gold and silver. Tim ringing that bell for all-time highs today. And silver, quite a run, almost $90. Backing off a bit from those highs, but please, go for it. That's quite a chart. You've been on the ball, man, with this gold and silver and the ratios. Please talk to us, Tim.
All right. This is, we've been looking at the XAU to NDX. This is the HUI NDX. Kind of shows a similar pattern. There's potential a 12-year cycle going on right now. That cycle started in 2024. If that cycle pans out, we're going to go into to 2036 on this cycle. There's a lot of similarities going on here, but we have initiation of an uptrend, they call it. That's when it's a big surge off of a significant low. And, we created a low for several years there, going from 2014 to 2024, and we finally broke out of that sideways trading range. And now the RSI of the monthly HUI index ratio got up around 70. We're at almost 74 right now. And so we're smoking here. Last time the RSI got this high was back in 2008. So this is a real unusual, or this signal is extremely important, I guess you might say. It doesn't happen very often, but when it does, you have to pay attention. But previous times, when you get up around the 70 range, I pointed this out, this is off the 2000 low, where actually your dad and me had a great time riding this rally up. And we got the same thing going on right now, I think. We may see a consolidation. Last time the RSI of this ratio, monthly ratio, got up around the 70 range. It went sideways for several months before it went up again, went sideways several months, up again. This is the COVID crash right here. So that nothing predicted that. But finally, anyhow, we may see a consolidation.
The financial crash, right? Like 2008 or whatever?
Yeah.
Yeah.
Oh yeah, you're right. This is 2008. That wasn't a COVID
Yeah.
crash. That was yeah. So
Right.
anyhow, but anyhow, everything came back, hit new highs. So I think we got a long ways to go. This pattern, this HUI monthly HUI NDX. This is what this ratio is right here. Could be a falling wedge. And if it's falling wedge, they predict to go back to the top where the falling wedge began, which is way up here. So anyhow, I'm predicting, according to this chart, anyhow, HUI will outperform the NDX. Also, I think XAU will outperform the NDX. I think the gold stocks is placed to be, according to this chart, for probably the next 10 years. So,
And let me ask you, because I know I've asked this before, because it's the index with the HUI over the NDX, and correct me if I'm wrong, but you don't necessarily you're not looking for the NDX to decline for that ratio to increase. You're looking for the HUI to increase, basically. What do you see? Do you see the NDX pulling back over that time? Because that could, that could jack up the ratio as well. But I think I've asked you that before, and you're looking at the HUI side, or how do you look at that?
well, actually, what I'm saying is gold stocks will outperform the NDX stocks. In other words,
Yeah.
the NDX goes up 10% this year.
Sure.
This chart suggests HUI will go up more than 10%, maybe 12%,
Okay, yeah.
maybe 15, maybe 20%. So what I'm saying is, of all the indexes right now, the gold index is one of the hot ones to be in. And I'm actually, how I'm kind of running my portfolio, I'm kind of selling the big winners and actually going down to the second tiers. And because this is still early in the bull market, and a lot of these monthly charts are just coming off the bottoms. And the ones that have been running, they've been running since 2024. So we're starting the second year of that run. So some of those are going to start consolidating, flip sideways or whatever. Probably not decline much, because once these come off the bottoms like this, there's usually no test of the bottom. That's all been done. The worst case scenario is probably, a lot of these will correct maybe 30%, and that'd be it. I don't think 50% is going to be in the. They're not going to let you in cheap. If you're not in, they're not going to pull back and get a good buy.
I agree. And I say it like that quick, as in we're not going back to that world, man. As in, right, metals were underpriced. We see it now, right? The price of everything else, the acceleration. I agree on that one for sure. Yeah.
Yeah, everybody hated him. You brought him up over the last couple of years. They kind of looked at you, the Looney Tune. So, now that's over. Now they're starting to pay attention. We haven't reached. People are kind of accepting the idea that these gold stocks are starting to go. But now they're saying, well, it's too high to buy here. Well, they're going to get higher. So,
yeah, I mean, at the beginning of that run last year, we were near 2,000. And, you had highs near 2,000 almost 13, 14 years prior when it made that run up to 1,800. So pretty remarkable you went that far. And then, of course, it did it at that time when we had all the inflation through that period of time as well. And you were still stuck at like 2,000, right?
Yeah.
So, yeah.
So here's another chart. This is the XAU to SPX. So the previous one is HUI to NDX. So that's the gold stocks against the QQQ. And now we got the XAU against the SPY. I wanted to see what was going on there. And the more times you test a high, goes back 2016, we kind of test that area. We tested it again. And it looks like now, are we breaking out here? Because we're above the 0.05 region. And, the next stop could be way up here, which is, that's actually 300% up from where we are. Take that 0.05 times 3, you come up with 0.015. That would imply this ratio will go up 300%. So if that means, I don't know, it's really hard to contemplate what these gold stocks are going to do over the next several years. But all these charts, even on the SP charts, compared to the gold stocks, are breaking out to the upside. The only thing to worry about, where does the next consolidation begin? So I had these couple of charts here. The last time, the bottom window is actually, for some reason, works a lot better than the one above. But the bottom window is the 50-day average of the up-down volume for GDX. The next one higher is the 50-day average of the advanced decline for GDX. So this is the stocks in the ETF of GDX. And last time it got this high was back in 2019. the bottom window, which is the up-down volume, 50-day average, got anywhere close to 30. Well, we hit close to 35 here. And that's the initiation of an uptrend. I keep talking about that, but that's really important. When you think they get overbought, they're going to correct. They don't. They actually flip, keep going up, or if not flip sideways. But last time they got up this high, the market kept going for another 12 months. Now, this is the COVID crash right there. That's that March 2000 pullback. But in general, it went straight down, straight back up again.
Yeah.
Will we have another COVID crash? I don't know. Maybe. If it does, you buy it. But anyhow, 12 months? Well, you start 12 months from October. It takes us in 12 months of 2026 October. So I'm thinking there's a good chance this rally could persist here until October of this year.
Pretty remarkable stuff, man. Every day, every time I talk to you, it's like we got new levels, new highs. You've had some great calls. Appreciate the time as always, Tim. Look forward to talking to you on Thursday, all right?
You want to
okay, thanks so much. We'll come right back, folks.